Hello, and if you cannot pay attention for 10 minutes, then this YouTube channel is simply not for you. But if you can pay attention, then welcome back, brother. And today, what are we going to do today is to talk about equilibrium as part of our trading exercise, okay? And before we start, who I am. So basically, my name is Yasha Roth, and I simply document my trading journey on YouTube. Now we were talking way too much, you are already starting to lose attention. So what is an equilibrium? Equilibrium is essentially telling you where the price is in so-called premium market or in discount market, okay? That's it. So it tells you where the price is in discount or in premium. So now let's draw a little bit of an example. We have a bearish trend right now, like this. And we know so far that if we want to go into a bullish trend, what do we have to do? We have to sweep liquidity, then let's say break structure. Okay, so look, over here we swept liquidity, over here we broke structure, and that's about it. Okay, eventually we can have a fair value gap over here. Okay, and then what do? Usually we wait that the price would go lower into the fair value gap and then continue higher and higher and higher. But another confirmation that we can have is to draw a so-called equilibrium, okay, which is going to divide this move higher. Okay, you see this move higher, it's going to divide it into two parts, and then you have so-called premium zone and discounted zone. Okay, so what are we waiting for? We are waiting for then that the price goes into discounted zone and then continue higher and higher and higher. Why is that important? So if you think about banking perspective, what are they doing? It's for the bank itself, is better to short when they are in a discounted zone rather than in the premium zone. Why? Because if they start shorting over here instead of over here, they have all of this difference as an additional profit. So bank is essentially making more money if they are longing, for example, from discounted zone rather than from premium zone, okay? And then the same thing also happens when we want to go short. So we have right now a bullish scenario. Then what do? We are right now liquidity sweeping. Then we have a break of structure. Okay, so over here we have liquidity sweep. Over here we have break of structure. Okay, and then additionally we have, for example, over here a fair value gap. So what do? We draw our equilibrium from the most recent high to the most recent low. Okay, and then equilibrium is going to be more or less somewhere here. And then we have again premium zone, and we have again a discounted zone. So what do we do then? We know that if we start shorting in premium zone, we will have way more profit than if we start shorting in discounted zone, okay? So what do? We wait for the price to go into the premium zone, maybe have over here a little bit of a liquidity sweep, touch fair value gap, you are above 0.5 on equilibrium, and then you continue lower and lower and lower and lower and lower. So what is your profit? You start shorting over here instead of over here. So all of this is your additional profit, okay? So that's essentially an equilibrium. Now, let's go to our HDB stock ticker, which we are using to analyze like our trading confluences. So immediately we are on 1 hour chart, and immediately here you can see what is going on. So we have a move down, okay, we have a liquidity sweep, then over here we have a break of structure. Let me show you. Over here we have break of structure. So what do? We draw our equilibrium from the most recent low to the most recent high, which is over here. And you can see that over here the price, wait, let me show you. You can see over here the price literally touched 0.5 for equilibrium, okay? Then it additionally touched maybe this fair value gap over here, okay? So it touched all of this and then continued higher and higher and higher and higher, all right? Good. What do we have over here? Over here we have a liquidity sweep. Then we have, with this little candle, we have a break of structure. Then we have, like this, we have equilibrium. But you can see that the price barely touched, it didn't even touch equilibrium, okay? So over here we would miss the trade, and then the price continues lower and lower and lower and lower and lower, okay? Then what do we have? Let's take a look. Good. Over here we have a liquidity sweep. You see, this is a liquidity sweep. Then where do we have break of structure? We have break of structure over here, okay, because this is the most recent low. We have break of structure. Then what do? We draw an equilibrium from the most recent high to the most recent low, which is over here. You can see in this example the price touched it went above 0.5 on equilibrium. Basically it went into the premium zone. It also went slightly above this middle point of the bearish fair value gap, and it additionally touched, it didn't touch it. I thought that it touched order block, but it didn't, okay? So the price comes into premium zone on equilibrium, it comes into the middle point of bearish fair value gap, and then it absolutely collapses lower, 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 okay? What else do we have? Maybe over here we have a massive liquidity sweep. See this candle? We have a massive liquidity sweep. Sorry for that. Sorry for that as well. Then we have over here a little break of structure, okay? So what do? We draw our equilibrium like this, for example, like this. And you can see that the equilibrium hasn't been touched on 0.5, okay? So what do then? You drag the equilibrium higher to the most recent high, which is over here, okay? And then you can see that equilibrium is still not touched, but then the price explodes already higher and higher and higher. So you basically missed the trade, okay? Fuck it, you missed it, but what can you do? Then we can continue to go further. What do we have, for example, over here? We don't have any liquidity sweep, so this is not going to be valid. What do we have here, for example? We have a little liquidity sweep over here, also over here, you see, liquidity sweep, but here we wouldn't touch 0.5 on equilibrium as well, okay? So you have to think a little bit about equilibrium, okay? For example, here you can see perfect scenario. We sweep liquidity. We have over here break of structure, you see, with this huge ass candle. So what do? We are dragging equilibrium, but yeah, you can see the price again hasn't touched equilibrium, but instead it continued lower and lower and lower and lower and lower. But then eventually it came higher, but there is no way that you know that the price will go higher, okay? So yeah, if you miss already, if the price doesn't retrace immediately to the equilibrium, then I would just ignore the trade and move on, okay? What can you do? Then what else do we have? Over here maybe we sweep, yeah, over here, look. We have a quick liquidity sweep. Then we have break of structure over here with this huge ass candle. What can we do? We can drag equilibrium like this. You can see that the price came back into this bullish order block, which is like here, and then it also went below 0.5 on equilibrium. So we are basically touching a discounted zone. So what can we do? We can maybe enter over here, you know, at 0.5. Okay, we put our stop loss here below that particular low, and we can target 1-to-1, which we get, okay? And then we move our stop loss to break even, and that's about it, okay? So yeah, that's good. That's it actually, you know, with equilibrium. I cannot teach you anything useful because that's everything that equilibrium is about. Okay, you wait for liquidity sweep, you wait for break of structure, and then you connect the most recent high with the most recent low and you get an equilibrium. Okay, for example, I don't know, look over here, we have liquidity sweep. Okay, then we have break of structure, we have it over here with this huge ass candle, we have break of structure, then we just drag equilibrium, and then we wait that the price touches 0.5, but over here it never does. Okay, because it just started to collapse lower and lower and lower and lower and lower. So yeah, that's about it, bro. Okay, that's equilibrium. Pay attention to those drawings that we did and use that as a guidance for equilibrium, because on stocks it's very hard to determine. The stocks don't move as good as, for example, Nasdaq or Forex or even crypto, but still it's possible. Okay, the concepts are working. It's still possible to determine those, or should I say, it's still possible to apply my trading strategy to stocks. Okay, but it's not as good as with Forex or indices or crypto. Okay. Now, at this point, I want to also invite you to join my Discord server. It's over here with the first link in the description. You can access it. And we have a lot of trading content, for example, daily analysis. We have trading breakdowns so that you can see what I'm thinking when I'm trading. We have also a lot of self-improvement, because our mission is to become better traders and stronger men. So join the Discord, subscribe to the channel and support me that way. Do the hard work, brother, and see you on top of the world.